Let's get the big picture of the financial markets. First off, read this disclaimer carefully. And do your good deed of today by liking and subscribing. So we are in a very potentially precarious situation here for the financial markets. Because while we have seen, very substantial sell-offs in many sub-themes, like if you look here at, the megatrends, then a whopping 84% of the stocks are in a bear market, meaning minus 20% from the 52-week highs. That is very, very substantial. When we go here to the other themes, this covers all kinds of industries. 49% of the stocks here, and there are many stocks here, they are in a bear market. And that is quite dramatic because the types of stocks in these other themes are very different from those in the megatrends. In the megatrends, we expect very big moves from the low, but also the bear markets are far more substantial. The very fact that these more plain vanilla finance themes, approaching half of them are in a bear market, that is very dramatic. So far, the indexes have, well, the major index, like the S&P and its brethren, it's held up. But we are seeing some chinks here in the armor. So let's look at the daily data points. So previous week, we looked here at, that very, very key blue 100-day moving average. So let's draw that in here. So you see that, the blue 100-day support, a bit messy here, and back here it was like a nice support level. Well, as you can see quite clearly, we sliced right through it like, butter. But it got actually worse because then we just eviscerated this red 200-day moving average. That was a bit of a... Well, it's the kind of things that you should worry about. And something I did hint about, that because the market has refused to correct for such a long time, at least have a serious correction, we have created a situation where, in the same way that we got a very self-reinforcing rally to the upside, an anomaly to the upside, and when we look here at these major indicators here, like the MACD, let's go here to the weekly data points. So when we look here at the MACD and we go back here to 1993, we have never had these MACD readings to the upside. RSI reached extreme levels, and also the distance from the 20, 50, 100, and 200 week moving average reached levels that were extremely rare. So we obviously had a bubble. The big problem with anomalies is that they have a tendency to also create anomalies in the other direction. So there is a very real risk that the next bear market will be just spectacular. And that is because, due to this major rally to the upside, we have had a lot of people with, gains, but that also means that they have different thresholds than previously for closing their positions. Because in a normal market condition, when you have like rallies, pullbacks, then people become better at, position management and essentially like risk management, which is, basically a synonym. In this market condition, people have a very distorted viewpoint. So there's a risk that people are going to just panic sell at the levels that are very, very extreme. We have seen something like this in some megatrend stocks. As an example, Virgin Galactic is something that keeps popping up in the news. So in this instance, you had this very, very, very substantial rally, to the upside, like a huge, huge, huge rally, just spectacular gains. But when we get that sell-off, it just keeps smashing to new levels, just extremely low levels. the thing is that what is happening with Virgin Galactic, it could be a bit of an omen about what could happen to major indexes. Same way that Virgin Galactic, the bullish sentiment got very distorted to the upside. It can then, well, it has obviously become very distorted to the downside. Today, the market basically has assumed that everything price-wise that happened with Virgin Galactic over the last 770 days is wrong. Over the last 770 days, the price for this stock was higher, meaning people thought that given the business of Virgin Galactic, it warranted a higher share price. All of that now has just been eviscerated. The market currently assumes that Virgin Galactic now, from a business standpoint, should be at the same level it was here in late 2019. Everything that happened after that, all the bullish analyst reports, fundamental analysis, you name it, all of it is thrown out of the window. I don't think that makes sense. But the problem here with Virgin is that we just have so many sellers and we do not know who is left selling. So I don't think that this price actually makes sense. But this is one of those situations where the market can be wrong longer than you can become liquid. Will be liquid. So that's one of those very just terrible situations that happens when the market gets very distorted. So yeah, complete despair here with Virgin, and maybe it's a bit of an omen. One of ATVI is the ticker. So Activision Blizzard, it saw a huge spike here, and that is because it is going to be acquired by Microsoft. So let's look at Microsoft as well. Microsoft did pull back, but yeah. So there is certainly a big plan of completing this acquisition within 2023. This is a huge power move from Microsoft. So Microsoft, they do have their venture into the gaming industry with the Xbox. And they have had a lot of success with the Game Pass. So for those of you who don't know, a Game Pass, it is a monthly subscription where you can get access to hundreds of video games. It is sort of like video games, the video games version of Netflix. You can actually stream the games, but due to the massive file sizes in the gaming industry, for most people, the best way to play it is to download the games onto your hard drive. The thing is that this acquisition of Activision Blizzard, it's one of the many acquisitions Microsoft has done in the gaming industry. They have acquired Bethesda, which creates absolutely amazing role-playing games. I do think that this could become very dramatic for the gaming industry as such. Obviously, this is bad news for Sony. So let's just look at Sony. Sony, what is the ticker? Okay, it actually is. Let's look at the Tokyo listed version. Okay, so Sony sold off on the news. Well, there was also, of course, a sell-off in the broader markets, but the thing is that this is bad for Sony. But I actually think it is potentially more dramatic for the other participants in this industry, and that's the game developers, because obviously, Sony is the primary competitor for Microsoft Xbox through their PlayStation. Sony also has their own. They plan to release their competitor to Xbox Game Pass, which works in a similar way. The thing is that the long-standing business model in this industry is that you are a developer, you make a game and you sell it for between $50 to $60. That is definitely, it's way more expensive than buying a CD or buying, a movie. Uh, but the thing is that the development, the number of people needed to make a AAA video game is way bigger. So there is a reason why the cost is what it is for these games. But here's the shot. Okay, I think that what Microsoft is doing by acquiring Activision Blizzard, I think it could become far more dramatic for the likes of, Ubisoft, CD Projekt Red, Square Enix, you name it. I think it's way more dramatic for these game developers that are not part of a Game Pass-esque ecosystem. Ubisoft, they actually do have their own sort of ecosystem with Uplay, which also has a subscription system. EA also has their own subscription system, which works similar to Game Pass. However, a very key distinction with how Microsoft has handled their system is that they release new games instantly in Game Pass. And if we don't know whether they will do it, but if the Activision Blizzard games, especially the new Activision Blizzard games, are just made part of Game Pass, like on day one, of when they are also released in retail, that is very dramatic, and it substantially increases the risk that the game developers that are not part of a subscription-based ecosystem, that they will share the fate of Blockbuster, because this change here in business model is really that dramatic. Because if you have the two alternatives, either you use your $60 to buy a new video game, alternatively, you could get around 4-ish months of Game Pass subscription for the same price. Obviously, it makes very little sense to buy that $60 game unless you are extremely passionate about it. So yeah, I do think that this will be dramatic if it's implemented the way I think it might be. Yeah, okay. So yeah, there's that bit of a talk about the gaming industry. But I do think that this is a huge thing. Because not only does this, if it is the acquisition is completed, because there is some there will be some litigation here in terms of antitrust, monopolistic tendencies of Microsoft, and so on and so forth. But the odds are high that it will be it just will come to pass. Because Disney, they have set quite a bit of precedence. They have acquired all kinds of studios and have become this giant in the video industry. I mean, they have when you look at the total portfolio of Disney, it's ridiculous. So yeah, most likely because of that, Microsoft will be able to fully acquire Activision Blizzard. Yeah. So beyond becoming a giant, absolute giant in the gaming industry now and threatening Sony, Nintendo, and severely threatening any gaming company that is not part of a subscription-based ecosystem, Microsoft will be able to get a very powerful position in virtual reality. So here is Facebook. They certainly saw a sell-off. I wouldn't say that this is purely because of Microsoft. There's been, of course, that sell-off in the market, but the news from Microsoft certainly doesn't help. The big problem for Facebook is that even though they have a very great VR headset, they don't have that much content. Microsoft, they have enormous amounts of content, especially if this acquisition goes through. The quirky thing about Microsoft is that they actually do not have a VR headset. Their competitor Sony has, their main gaming competitor Sony has a VR headset, but Microsoft has done some very interesting things in the past. One of the things they did is to have this. They had something called Kinect. So Kinect was this this fancy camera that was able to read and recognize body movements. It was pretty cool, but it didn't really become what people thought it would be. But hypothetically speaking, like I don't have any, to be clear, I don't have any like secret intel. But if like some 2.0 version of Kinect comes out and bundled with some kind of headset, that would be potentially extremely disruptive for the entire VR industry. Because Facebook, they have this, Oculus system. You put it on your head, and you have some controllers in your hands, and that is what most of these systems are built around. They are good, but they could obviously be, they could certainly be a lot better. However, it would be extremely cool if they are able to come out with Microsoft, that is, comes out with some Kinect 2.0, because then you will not need game controllers. Like the Kinect would then be able to read all your finger movements and whether you are leaning with your body, and they could even be able to notice micro movements in your legs. So you could pretend to walk while standing still and then be able to walk inside the video game. I'm purely thinking out loud here. This is a stream of consciousness. So I don't have any secret intel or anything like that. It's just that I could see them do this. This makes sense. And it would be extremely cool and spectacularly disruptive. Okay, so let's look at some markets now. Let's actually look here at the S&P. So what is my take here? So we have seen this very substantial sell-off. The bears have been very aggressive. When we do look at RSI here, there have been a few times where we have gone lower. So let's actually look at the previous time. So the previous time we had this kind of RSI was actually during this lockdown situation, okay? So that is something to think about. We are very oversold, but we are in a territory where, like, we could actually go lower if, the market really just gets spooked. If you look here back in 2018, we had a situation where, we slashed through all kinds of support levels, and then we did have, just a liquidation break. And we also had this very low, what's this, the previous time before that, where we had, extremely low RSI levels. That is back here in 2015. So during this sell-off, we also had this very, this self-reinforcing sell-off. So that is just something to be aware of. So yes, there is a very real probability of a bounce here, but there's the big annoying but that if the market really starts to freak out, there could be, substantial more downside within this move. So yeah, this is this is going to be very exciting. It was really bad that we lost this 200-day moving average in such an ugly fashion. So let's look at some other markets. China is something I have talked, a bit about. So this is interesting. So China, it formed its recent low here back in the 5th of January, and is up, 9-ish% from that level. So that's interesting. I talked a bit about, that, there's a real possibility that the low level in China will be viewed as a value play, especially long term. And so far, we are seeing some of that. So I do think that China is interesting. And so as far as, pairs, pairs trading goes, so a pair trade is where you have like a bullish position simultaneously as you have a bearish position. on two securities that are that have a clear relationship. So what you could do as an example is to have like, if you think that there's value in China and you think that America is overvalued, then you could be like long a Chinese tech stock and then be short an American tech stock. So that's something to consider. Pairs trading, it like back in the day, very few people could do it because it was this it was just very frankly difficult due to the commissions. Because with a lot of pairs trades, you're getting this market neutral position, but you only of course make that difference, that divergence between them, and it could occasionally be like picking up pennies. But now, with zero commissions, it's never really been a better time to look into pairs trading, and also just more broadly in like long short trades. Okay, so here's the TLT. So we did have this, head and shoulders pattern, and yeah, left shoulder, head, and a right shoulder. The paradox of the head and shoulders, which I have talked about before, is that you can have this support level around the neckline. That's one of the ways in which it quite frequently it doesn't really fulfill itself in the way one would expect. That's one of the reasons why I am very fond of shorting a head and shoulder around the head territory or around the upper end of the right shoulder. I find that that's a better risk reward setup. To go short a head and shoulder here around that neckline, it is more. There's the risk, that the neckline area is going to become a cluster of horizontal support levels, and that's how they often become neutralized. Okay, so let's look at gold. So gold, it is actually doing something interesting here. So it is flirting a bit with some breakout levels. Okay, some would argue that we need to break out above this level. This level, well, okay, that was a bit too small. But break out above this level here to get that. To get like a real breakout, but you do clearly have some breakout above this level, this recent level, and pretty close to these levels back here. So it's some interesting movements here from gold. Let's look at some other commodities. Let's look at crude oil. So we do have a breakout here for crude oil. So that is interesting. I especially, so generally speaking, I'm a bit cynical when it comes to breakouts because a lot of breakouts are a bit. And they are fun if you were a part of the move before the breakout, but to just blindly buy the breakout is a bit risky. So a breakout like this, where we have like, so this is the price action, and then it goes like this, and then you have like the breakout level. Those kinds of breakouts very often resolve to the downside, temporarily to correct a bit. But the kind of breakout where we have now with crude oil, that is more like through these waves, and then you have the breakout. They have a higher probability of working out. So let's look here at some of these indicators like the RSIs and the likes. So okay, so yeah, when it comes to the RSI here, we do have like lower highs and lower lows. Looking at the distance here from the blue 100-week moving average and also the red 200-week moving average, that they are actually at levels that have triggered some pullbacks in the past. So if we measure some of the recent breakouts here, so this breakout here was like 11-ish%, and then we pulled back 19-ish%. Yeah, so let's measure this one here. So this is a breakout from this level. So let's measure. So you got, 13-ish%, and then we pull back, approaching 9%. Yeah, so that prior price action is just something to be aware of if you are going to like buy this breakout. It is fully possible that it will work out, in that bullish direction, because that's something we have seen in the very recent past. But you also just have to be aware that crude oil very obviously has this tendency to rally, break out, rally a bit more, and then pull back. So if you are going to trade, the breakout, you definitively want to have some stop in place. Okay. So yeah, the market is at a very interesting point here. And also more specifically, what is happening here with the gaming industry, which is one of my favorite industries, and also virtual reality. This could actually become very, very epic as well. Okay, so whatever you do, of course, you want to be as market neutral as possible.